Welcome back, Cecilia. Nice to see you.
Yes, I'm happy to be here.
So obviously a strong jobs report, better wages, higher labor force participation. How do we square a jobs market like this that is on fire with some of the signals we're getting, like a yield curve inversion, which typically signify recession?
Well, look, the report that we got today on the labor market really suggests that the U.S. labor market in particular continues to make robust gains, which we know has been so important since the labor market suffered so tremendously at the beginning of the pandemic. As you mentioned, we've got about 93% of our employment is back. We've seen an increase in labor force participation, which has been so important because workers have been hesitant to come back due to the virus, but workers are coming back. They're seeing some increase, at least in nominal wages. And these gains have been broad-based. Unemployment is down to all workers who want a job fairly can find one. We obviously are tracking the risk to the economy going forward, but our economy is in a very good place. Household balance sheets remain strong, even accounting for inflation. And this tremendous growth gives us a cushion to weather additional variants. As we saw, this economy reflects Omicron and any maneuvers that the Federal Reserve might make, and importantly, even the Russian invasion of Ukraine. So we believe the economy is in fairly good shape as we weather these shocks going forward. But obviously, we will be tracking, and the president is acutely concerned about it. And he's doing all that he can to address the prices and to keep our eye on what is happening in the economy writ large.
One symptom of this tighter and stronger job market is we're seeing an increasing number of wins for labor movement in this country, including just today, where Amazon warehouse workers in Staten Island voted to unionize. First time for Amazon. Are you supportive of that move, and would you like to see it spread?
Well, I think what we know about the U.S. labor market is that over the last few decades that the median worker has had rather anemic wage growth, and that we've seen an increasing separation between labor productivity and wages. And so I think it is appropriate to see a tilting back towards seeing workers see higher earnings. Obviously, we want that to be driven by productivity gains, so it's sustainable growth. But I do think it's important that workers are getting their fair share of their productivity gains.
But isn't that happening without organized labor, without unions? It's happening organically. We're seeing wage growth shoot up to levels we haven't seen in years. And the market for hiring is strong.
Absolutely. And that's part of workers having a voice, having some say, having more power in the labor market. One of the facts we know about our labor market is that it's become increasingly concentrated. So it's looking more like a monopsony. We know that in monopsonies, there are not enough workers hired. Their wages tend to be lower. And this is a phenomenon that labor economists are starting to increasingly understand. And so we think it's important that there be more competition in the labor market so that workers are paid according to their productivity and are paying a fair wage and have good working conditions.
Chair Rouse, I know that you and the team are also very focused on the higher gas prices. We saw the move by the administration to release the SDR, Strategic Petroleum SPR, reserve yesterday. How is that not just a Band-Aid solution, though? Because ultimately it doesn't change the fundamentals of supply, which are driving oil prices higher, especially with Russia increasingly shut out for who knows how long.
Well, absolutely. So the release of the Strategic Petroleum Reserve, the president has done a historic release of 1 million barrels a day for the next 6 months, and he's gotten the cooperation of about 30 countries around the world that will be also releasing millions of barrels from their own reserves. This is the short-run solution as we bridge to oil companies stepping up production from their existing wells, and as we also make a transition to greater energy independence. So the release from the SPRO, the Strategic Petroleum Reserve, is meant to be the short-term way to address this and to address the increased gas prices due to Russia's invasion of Ukraine. But fundamentally, we know it's important that we increase supply of oil around the world because fundamentally the price of oil is a global price, and we need to ensure that there's an adequate supply around the world.